Don't bet on what worked 20 years ago. It worked 20 years ago. It was good 20 years ago. Not now. You kind of have 5 years to jump on the train. That's it. This is not like optional, this Bitcoin thing. This is sort of like you get on board or you may be literally poor. It's a simple thing. You buy Bitcoin, you don't sell Bitcoin. Bitcoin 1 million, maybe we're at half the market cap of gold. Okay. That's a start.
Well, right now, gold is extremely overpriced relative to Bitcoin. So it really tells you something. Probably a really bad time to buy gold.
Fred Krueger begins with a simple but powerful claim. Almost nothing is keeping pace with the rate at which governments print money. Yes, stocks rise. Yes, real estate offers stability. But when you compare them to the rate of fiat dilution, they're often just barely treading water. Real estate especially has been underperforming the money printer. Even equities, despite their hype, are only maintaining a rough equilibrium with inflation, but there is one outlier, Bitcoin. According to Krueger, Bitcoin is not merely outperforming the money printer, it's killing it.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We all know that there's this money printer, and nothing is really beating the money printing. The stocks are sort of keeping up with the money printer. Real estate is underperforming the money printer. There's only one thing that's consistently beating the money printer. That's Bitcoin. Bitcoin is actually not just a little bit. It's just killing the money printer. So it's like it is destroying it. So, if you really think about it, yeah, the money printer is a problem, but Bitcoin is absolutely smashing the money printer as far as track record. So really, it's up to you. Either you can get the facts, learn what's going on. I think the printing stuff, it's kind of why it called it the final chapter of fiat. I don't think fiat is going to survive beyond 20 years. I think we are going into a world where, you try to pay with dollars for a lot of things. They'll be like, no. But in 20 years, I don't think that priced in fiat is going to even make any sense. Nobody's going to care about fiat. So you kind of have to make the switch now. And then sort of ask yourself, okay, if you're holding cash right now, you're actually watching it go down 30% a year in Bitcoin terms, at least. So is it worth that extra safety to have this thing go down 30% in Bitcoin terms? So, and I would argue, to some extent, there's some case for it, depending on your wealth levels and your income levels and everything else. But there's also a pretty strong argument to be made for the next 5 years to be kind of Bitcoin only. This is not a place for you to become rich. Not a good way to become rich. Don't bet on what worked 20 years ago. It worked 20 years ago. It was good 20 years ago. Not now. So I think that and look, this is the biggest asset class in the world. This is bigger than the stock market, bigger than the bond market. Because everybody is ultimately pretty cautious, right? And so they're like, I put my money there. Well, real estate can't go down. I can, pay his rent. I can rent it out. The reptile brain loves that kind of story. Yeah. And the reptile brain doesn't like, I'm going to trust this thing, my future to magic internet. I think the next 5 years, really. You kind of have 5 years to jump on the train. That's it. But it becomes very blurry, 5-10 years out, because I don't know. We're going to be walking around with humanoid terminators walking around the streets. If you're an asset holder, it's going to be great, right? If you're a worker bee, it's going to be really bad, because most likely it's coming for your job. So you really gotta. This is not like optional, this Bitcoin thing. This is sort of like you get on board or you may be literally poor. You actually own Bitcoin, but not like a proxy. If you actually own Bitcoin, you don't need to. You don't need to do anything more It's a simple thing. You buy Bitcoin, you don't sell Bitcoin. Now, easier said than done, you know. And I have a whole chapter in there about hodling and, you know, like psychologically how you're gonna do it. But look, I plan to hold through Bitcoin 1 million. Not potentially all my Bitcoin, but most of my Bitcoin will be there at Bitcoin 1 million, right? That's and I would recommend most people to try to hold through Bitcoin 1 million. It's not a crazy number. It's very real. Bitcoin 1 million, maybe we're at half the market cap of gold. Okay. That's a start. You know, we'll have, you know, we'll be at 30% of world-based money, like central bank owned money and actual physical cash. But still, fiat will be much bigger, you know, in every sense. M2 will be much, much bigger. So, you know, I think this is it's a very long thing. It's a very long journey. And I think this is a marathon. So you get ready for a marathon, you know, train yourself for a marathon and, you know, train your brain to go hold this stuff for a very long time. That's what I think. The cycles are created by halvings, right? That's sort of the way people think of it, right? Like we've got these halvings. Okay, there's going to be much less mining rewards, so that's bullish. Therefore, we're going to rally, right? And then, you know, it's sort of like the average total length of the bull market is 3 years, ending in this crescendo, you know, overvaluation. And then we have this drop. That's not really halving related. It's just bull markets last 3 years, and then we crash, and that crash lasts a year. And then miraculously, we got the halving coming around, and everybody gets excited again. That's sort of the model, the thought model for it.
Yep.
I kind of actually don't even think it actually even makes sense relative to past markets because, like, I think this bull market that we're in has nothing to do with the halving. It has everything to do with the ETF, right? We might not be... If Kamala Harris was elected and we didn't have an ETF, take those two things, Bitcoin would be at 50,000, you know? Like, we wouldn't be where we are now. So I do think the facts matter. I think interest rates matter. I just would statistically not read too much into the halving, but I would read a lot into the power law. Like, I think this power law has such statistical strength that I think you can bank on that.
Krueger foresees major stress in real estate markets. As layoffs spread and automation accelerates, many property owners will be forced to sell, putting downward pressure on prices. Meanwhile, asset owners in Bitcoin, gold, AI equities, tech-optimized capital markets will see substantial gains. This widening disparity, he warns, is not temporary. It's structural. Krueger envisions a world in which Bitcoin becomes a primary store of value, fiat currencies lose relevance, middle-class wealth increasingly flows into digital assets. Automation reshapes the workforce. Bitcoin continues following its long-term power law trajectory.
There's a pretty good case why we're going to have something like a big print / bailout needed for property. But in general, I think, you know, we're going to be in a very lopsided economy where if you own shares in NVIDIA or OpenAI or Claude or Bitcoin or gold, you're going to do really well. If you have real estate, well, the guy next to you is going to get laid off and his real estate is going to be for sale, you know? So I think it's going to be pretty bad for the middle class. We all have this sense of how great Bitcoin has been as an investment, right?
Yeah.
And there's like lots of different ways to slice that and dice it, right? You can say, well, it's been trading for 15 years, and over the last 10 years, it's been the top performing asset in 8 of the 10 years. That's one way to look at it, right?
Yep.
You can look at it peak to trough, drop down, all these other different ways. But, you know, if you really want to understand what it is, you know, you have to sort of say, is it following some kind of statistical pattern? And you could sort of say, well, maybe it's an exponential pattern, right? Like maybe it's some constant growth curve, really. And there's a lot of volatility around that growth curve. So And you can model that. You can say, does it fit an exponential growth curve pattern? And the answer is no, it does not. Okay, it doesn't actually fit that. And then you can ask yourself. And by the way, stocks fit that really well. So if you look at the S&P 500, actually it is a very much an exponential growth pattern. Now, again, just like if I told you the S&P 500 goes up 11% a year, you're going to be like, not always. It didn't do that in 2019, right when the pandemic hit. It was down a lot, so it still wobbles. But there's a correct model for the S&P, which is it's a constant growth rate. It's growing at 11% a year, and that number is about the same as it was 10 years ago, right? Now, Bitcoin is not doing that. Bitcoin objectively is not doing that. Bitcoin was growing at 500, 1,000% a year back in the very early days, and it's slowing down, right?
Yeah.
And that slowing growth model is exactly a power law, right? So we now have this is just the accurate description of what Bitcoin's been doing. Now, whether it continues to do it or not, we'll see. But this is a description of what Bitcoin has done so far. It is the accurate description. So this is not subject to interpretation, right? This describes the way Bitcoin has been since really the first recorded price, movements like October of 2010, really, and then we know now kind of how this thing is moving and what's the use of it. Well, the use of it is two things. One is if it should give you a lot of conviction as to where we're going in the next 5 and 10 years, I would say. Maybe even much further than that, right? This law does not show any signs of deviating. It seems, in fact, that it's getting stronger and stronger over time. So I would say, the first thing is it really gives you a mental model of what's happening, right? So you now have a model of, and we're probably growing right now at about 40%, compounded annually. But, there's a lot of volatility around that 40. That 40 could have a negative year, right? It's possible, according to the volatility of it. But, on average, it will either double or it'll go down by half, roughly. And that's kind of what the power law tells you. So that's the first thing it tells you. The second thing it tells you is you have some metric of valuation. It's a very rough metric, right? You can't trade on it like day trade or anything like that. But we have this power law trend line. If you're at, 2 times the trend line, that is, you're getting into elevated territory. Now, it doesn't mean you're going to stop there. You could go to 3 times trend line. You might go to 4 times trend line, but we're starting to get more pricey. So what does that mean? That might mean you stack less. Like if you're earning money and you're stacking, maybe you stack less hard at those kind of prices, right?
Yeah.
It also means that if you're kind of doing some rebalancing and you want to keep a certain amount of cash, maybe those points you have a bigger rebalancing, right? So that can be useful. I think it doesn't give you shouldn't think of it as a trading thing, no matter what, but you should never trade Bitcoin, right?
Yeah, agreed.
You should never trade Bitcoin, but if you want to reallocate somewhat your position, that tells you something. And so I think it's extremely useful. It also is very useful to look at it versus other assets, right? So you can look at these power laws versus gold, versus the S&P, and you can sort of see, well, right now, gold is extremely overpriced relative to Bitcoin. So it really tells you something. Probably a really bad time to buy gold, right? Even though everybody's saying buy gold, even though people are lining up in front of banks to get gold, probably a really bad time to buy gold.
Fred Krueger's message is clear, direct, and urgent. The financial world is changing faster than most people realize. Money printing is accelerating, automation is disrupting labor markets, and fiat currencies are quietly entering their final chapters. Through all of this, Bitcoin stands alone as the asset consistently beating inflation, resisting debasement, and following a statistically robust growth pattern. Whether you agree with Krueger or not, his analysis forces us to confront a difficult question. Are we preparing for the world that's coming or clinging to the world that's fading away?